In trading, there are two dangerous emotional poles. On one hand, the fear of failure, and on the other, the euphoria of success, breeding greed and gambling. Paradoxically, positive emotions after winning trades can be just as harmful as negative ones. When the market rises and trades are profitable, a trader's head can easily spin from the feeling of limitless profit potential. We feel like market geniuses, we relax, and that's exactly where silent enemies await us: excessive greed and gambling. In this motivational warning video, we'll explore why euphoria after success is so dangerous and how to stay cool-headed on the rise, sticking to your plan and not giving in to gambling. Typical situations where success goes to your head. A winning streak and the loss of caution. Imagine, several successful trades in a row have brought in impressive profits. The trader is on a roll, confidence is overflowing. In this state, many start increasing their stakes, breaking their own rules. Many beginners share that they doubled their account in the first week and felt invincible, but a couple of weeks later, one careless trade wiped out 85% of their capital. Euphoric success made them put too much on the line and forget about the risks. Traders' euphoria and gambling instinct. After a big win, a trader can experience true emotional euphoria. A feeling arises that the market is bowing to you and every next trade will surely bring profit. In this state, a person starts acting like a casino gambler, certain that luck is on their side. He makes impulsive trades, joyfully throwing chips at the market, thinking he's tamed the price. For example, a trader might enter additional trades without analysis, driven only by a thirst for even more money. Such gambling behavior gradually spirals out of control, ignoring the plan and the rules. Greed after a series of wins manifests in the trader starting to ignore their trading plan. Instead of a disciplined approach, thoughts arise: why limit yourself? The market is giving, shouldn't I take the maximum? A trader might not take profit where planned, hoping to hold positions just a bit longer in case it grows more. Or conversely, seeing a floating loss, not closing a losing trade in the hope that the market is about to turn around. Risk management rules take a backseat. Trade volumes are inflated, stop losses are moved or removed entirely, and questionable decisions are made. All for one goal: to squeeze the maximum out of the market while luck holds. Unfortunately, such behavior often leads to heavy losses. Dangerous consequences of greed and gambling. A trader's greed is an insatiable thirst for ever-increasing profit. On a psychological level, an unrestricted market truly creates the feeling that there is no profit ceiling. If a trade is in the green, there's a temptation to hold it indefinitely because enough is never enough. Thus an illusion is born: just a bit more and I'll hit the jackpot. Mark Douglas, a well-known expert on trading psychology, noted that true greed is insatiable. No matter how much a greedy trader earns, it always seems like too little. Under the influence of emotions, a trader loses their sense of proportion and doesn't know when to stop. Euphoria dulls caution. The positive emotions of success are dangerous because they remove the natural brakes in the mind. The fear of losing money vanishes, and with it goes reasonable caution. While things are going well, the trader stops critically evaluating the market. He may dismiss warning signals and see only what reinforces his belief in further growth. Overconfidence, "I'm doing great, everything's working out," leads to an overestimation of one's knowledge and skills. In the end, a person starts thinking they're invincible and no longer listens to advice or their own previous rules. However, the market quickly sobers you up. As soon as the situation changes, a player caught in a frenzy risks losing everything they so enthusiastically earned. Mark Douglas wrote, "It is dangerous for a trader to win if they haven't learned to track and control their emotions." In other words, victories without discipline breed carelessness. Euphoria from a series of profitable trades easily turns into overconfidence, and the trader enters a state where they truly believe they are infallible. Such self-deception has an extremely negative impact on trading results. Each of us has our own threshold of euphoria, after which we begin to consider ourselves invulnerable. And as soon as a trader is gripped by euphoria, they find themselves in danger. The market tempts and punishes. When a trader gives in to greed, the market seems to play on their weaknesses. A deceptive whisper echoes in the head: "Don't exit the trade, you'll get even more." And if the trade is losing, another voice whispers: "Don't admit defeat, be patient. Soon everything will be recovered." These temptations are very strong in a state of excitement. A person begins to believe what they want and can stubbornly wait for a reversal, watching as the loss grows. Ultimately, reality takes its toll. Either the profit evaporates or the losses become painfully large. Douglas fiercely warned, "If you give in to such illusions, prepare for failure and suffering." It's no wonder there's a saying: bulls make money, bears make money, but greedy pigs get slaughtered. The market does not forgive excessive greed. A trader gripped by excitement often gives back to the market everything they managed to earn. Practice is full of stories where gambling behavior led to collapse. A trader who didn't lock in profits in time due to greed saw their winning position turn into a loss. Another, having doubled their account in a short time, began to bet more and more and eventually blew the deposit. Ignoring stop losses in the hope of a reversal often ends in a disaster for the account. Greed can erase months of successful work with literally one or two mistakes, because under its influence, a trader risks too much and too often. Thus, excitement is a silent enemy. It creeps up in the guise of euphoria, but in the end, it can destroy your career as quietly as it imperceptibly began. Structure and rules instead of greed. how to maintain success. Discipline above all else. Successful traders know to avoid falling into the trap of their own emotions, it's necessary to build a clear structure and trading rules and strictly follow them. Mark Douglas emphasized that consistently profitable traders develop internal mechanisms to counteract euphoria and overconfidence. Simply put, they replace greed with discipline. In moments when everything is going well, it's important to stay cool and stick to the plan, no matter how much you want to hit an even bigger jackpot. Your trading plan is a shield protecting you from impulsive urges. Follow it just as strictly during the ups as you do during the downs, cooling down the excitement. If you feel that euphoria has overwhelmed you and your hands are itching to do something rash, take a pause. Step away from the market for a day or two, or at least for a couple of hours. Lock in the profit you've made, take a breather. Such a cooling off period is a proven way to clear your head. During the pause, emotions will settle and you'll soberly assess the situation instead of trading in a fever of excitement. Remember, the market isn't going anywhere, opportunities will always be there, but your capital is a finite resource. Practical steps against greed. To keep excitement under control, implement the following practices. First, clearly define the risks and goals of each trade. Decide in advance what profit you are satisfied with and what loss is acceptable. Set your take profit and stop loss levels and stick to them. If the target is hit, take your profit. Don't think, what if it keeps going up? If your stop is hit, exit instantly. Don't let greed talk you into holding through a loss. Second, limit your maximum position size and your daily profit and loss. Set a limit on the percentage of your deposit you can risk per trade or lose in a day. Once you hit your daily goal, take a break. Set a daily profit limit, as professional traders often recommend, so your successful morning gains don't lead to evening losses. Third, keep a journal of your trades and emotions. Record not just the trade details, but also how you felt. Regularly check if your recent successes have led to overconfidence. Self-analysis helps you spot when greed, not logic, is driving your decisions. Recognizing the problem is the first step to solving it. Fourth, remind yourself of the consequences. Keep a small reminder at your workspace, like a quote or a rule. Something like, the market rewards discipline and punishes greed. Remember, a single trade doesn't have to fulfill all your dreams. Approach the market objectively. After all, every major loss starts with the thought, just a little more. Do not ever let that thought take control of you. Mental preparation? Beating the gambling urge means changing your mindset toward trading. View your trading profit as the result of a solid process, rather than just simple luck that needs doubling. The true stability you seek is found within your own mind, not in the fluctuations of the market, exactly as Douglas wrote. This means you must work on a disciplined mindset, build emotional resilience, and only trade with money you are truly prepared to lose. That way, your trades won't be fueled by excessive emotion. Practices such as mindfulness and meditation can help you to regain your focus and calm when winning gets intense. The goal is to stay composed and objective even at the height of success. The takeaway is simple. Greed and gambling are luck's treacherous companions. They creep in when you're on top, whispering that you're special and rules don't apply. The financial market offers great opportunities for growth, and profit is often limited only by your skill. But without strict discipline, it's just pure chaos. Successful traders follow their plan diligently and stay calm and composed instead of blindly chasing short-term profits. They know that every rise carries the potential for a sudden fall if you allow your focus to slip away. Remember, your main opponent isn't the market itself, it's you, or rather your own emotions. By learning to control the euphoria of winning, you'll avoid fatal mistakes. Made a great profit? Congratulate yourself and stick to the plan as if nothing happened. Don't let a brief triumph go to your head. In trading, the winner isn't the one who hits a jackpot, but the one who steadily keeps and grows that wealth. So be careful on the wave of success. Stay cool on the way up and don't give in to the gambling urge. Then neither greed nor euphoria will be able to defeat you.